Okay, let's try that. Okay, sorry about that. All right, I guess I had to add those to the overall market there, or overall stage. All right, okay, so we'll start back over here. Market trend model, tick US here. Obviously, bolded CT, we want to see it stay above the colored ribbon, indicating more buying versus selling in the overall market, and above the shorter term moving averages. The filtered cumulative tick fairly flat yesterday, even with our recovery. We want to see the bolded white CT start making new highs as the SPX continues to move up, obviously indicating more buying versus selling in the overall market. The tick ARC, this is how we base our mechanical portfolio. So I already went over that. We want to see the bolded CT, white line, stay above the colored ribbon. We want to see the colored ribbon not flip to the downside. We talked about that inflection point a few days ago, and then moving back to the downside. Okay, I think I've added the sound, so we should be good to go. And then the bolded CT, obviously staying above the colored ribbon, and we want to see that lower left to upper right. So hopefully that will indicate more buying versus selling in the overall market. All right, moving on the SPXA. Sorry about that. Everything should be good now. SPXA, call dominated above and below spot price, so supportive on pullbacks in the overall market. We want to see this green net delta continue to be maintained. Again, these are in the money calls below us in the left-hand plane. We like to see these in the money puts start to get removed. If you're a bull, you want to see this fill in with positive net delta, that again indicating out of the money call speculation. Also remember, obviously we have the monthly expiry where this money gets deployed on out in time for November, and the Q4 expiries will let us know kind of where the market is positioning on for the rest of the year. So as of now, call dominated, so it's still bullish, but obviously we've seen some removal of the call speculation to the upside, either versus what will be expiry or closing mechanically of those contracts. So we want to see this fill in with green net delta out of the money call speculation if you're a bull. Obviously, if you're a bear, you'd want to see these in the money calls below us start to get removed, and out of the money puts start to fill in with red net delta. 6,700 the upside, still going to be critical point to stay above transition. We'll always talk about that staying above the transitions in a more call dominated positive gamma favored environment. 6,750 the upside, key area watch, and then 6,580 to the downside. All right, let's move on to the SPXP. These are our speedboats. These contracts turn over much more rapidly. Call dominated above and below spot price. Key takeaway here is effectively the net GEX is at zero. So we could flip either direction depending on what the intraday volumetrics are going to be driving. So this could obviously go positive, stay call dominated, or could go negative depending on spot price starts moving down and capturing all these out of the money puts. You'll also notice the net delta is fairly red below us, a significant amount of out of the money put speculation, as you'll see with some of our other tools. It is improving slightly though, call dominated, so we'll give an edge to the bulls. The transition area is going to be key, as we always talk about. 6680, 6685, 6700 was our implied open at the time of looking this. I believe it's moved up slightly. We see PGEX at 6800. That means the structure is anticipating a move up, at least speculator wise, are anticipating moves up towards this direction. But again, we'd like to see these out of the money puts start to be removed and start to fill in with in the money calls below us. That would be much more supportive to the downside. So we'll continue to watch this day over day. All right, moving on, the SPXP delta balance. Again, this is showing us the individual positioning above and below spot price of the SPX option structure. It has improved some. The red dotted line is the left-hand plane. This is below spot price. So improved rapidly to move above zero. So again, we're trying to capture those in the money calls below us, starting to continue to fill in, and the out of the money puts starting to be removed, which is speculation to the downside. We like to see this right-hand plane, which is the green dotted line, continue to move above zero, indicating out of the money call speculation coming into the complex. And the blue dotted line is the delta balance. That's the aggregate of the two. Obviously, we want to see that move towards the one level, again, which it has so far. And then our future expiries, we see on out to the 17th, which is Friday. We're maintained above zero, but then we do start to see a little bit of weakness creep in the left-hand plane, possible some in the money calls below us being removed from the expiry, but the right-hand plane is being maintained. That's out of the money call speculation that will drive price to the upside. And the delta balance, at least staying above 0, but we see a slight drop on out into the middle of next week. So again, we'll watch that day over day to see if this continues to be maintained above 0. As long as it's above 0, we give an edge to the bulls and the call speculators for possible price appreciation, or at least maintaining the price where we're at without moving significantly to the downside. All right, our GEX ratio, this is like a put call ratio, but it is the short dated call gamma versus short dated put gamma. That gives us our ratio. Again, I spoke about this yesterday. I wanted to see the GEX ratio continue to move to the upside if we're seeing SPX appreciation in price. This would indicate that out of the money calls, that ratio on the top side is again increasing versus the short dated put gamma to the downside. So our ratio would be getting more positive, and you want to see this continuing with a positive slope to the upside, indicating short dated call speculators are coming into the overall complex versus short dated put speculation. All right, let's move on to the SPXP net stat command. This is our highest sensitivity levels for today. 6,600 to the downside, significant in the money calls below us. You see that left-hand plane integral. You see the right-hand plane is much less than the left-hand plane. So our out of the money call speculation, as I discussed, is not as extensive as the left-hand plane in the money calls here for 0DT for today. 67.15 to the upside is going to be that key first strike. We see our charm levels, out of the money calls significantly outpacing out of the money puts. This charm, if we're below 67.40, as these out of the money calls decay, will continue to grow and be a headwind. So 67.40 to the upside would be that first area I watch for stalling via the charm. We know that continues throughout the day via time, depending on not depending on where price or spot price is moving. So that continues throughout the day. And the net gamma key sensitivity levels 6,700, 6,715, and then we have our Vanna levels here. All right, let's move on to the SPXP 0DT for today. Let me go ahead and grab that. Sorry about that. All right, let's go ahead and grab this. All right, moving on. SPXP 0DT for today. One word that I said for the takeaway for today was wide and loose. Again, transitions very wide, 6650 to 6700. GEX and DEX transition, as well as our drunken sailor range. We are put dominated. Net GEX is only negative 1,000. So again, at that floor or floored noise of where we could flip to call dominated depending on where we open at. If we open above transitions, we could easily flip to call dominated, driving all these out of the money, or driving some of these in the money puts out of the money as we continue spot price appreciation. Getting above 6,700 and staying above obviously is going to be definite key level. If we drop into the transition levels, this can be some very chaotic price action. You see very low exposures here via the net OI and these contracts. This is going to allow spot price to be driven rapidly up and down depending on what the intraday volume metrics and market participants are opening and closing contracts. If we get below 6650, we'd anticipate more weakness down towards this kind of double strike at 6625, 6630. We'd anticipate that to be supportive. Bottom of drunken sailor range. We do have in the money calls below us. So we would anticipate most likely a bounce area as we saw yesterday from this area. And then we drove rapidly right back to the upside. So we'll watch this our web app after the open. The transitions can narrow depending on where spot price is. But as of this time, moving into the open, transitions are very narrow, or sorry, very wide, and spot price can be very chaotic if we're within this overall area. So let's move on to our trading view chart. I've already overlaid our trading view scripts. We have these via Thinkorswim or Trading View. Again, full expiries for me because I'm not necessarily a 0DT trader, but we have 0DT scripts that you can overlay if you are a 0DT trader. Basically, what I do is I just manually draw in our drunken sailor ranges 0DT DTE transition, so I can have those overlaid. And I like to look at the confluence of areas. You'll notice the GEX and DEX transition confluence from 0DT is actually in trans and negative GEX. So again, key area, key level that we'll be watching to the downside if we move there. And then P-Trans 6685, 0 GEX 6680, and then we have drunken sailor range 6700. Obviously, round Livermore level, just a round number for positioning and algos. So going to be key area to stay above. Prior day high 6725, and then we have plus GEX up there at 6750. We don't believe we're going to go higher than 6750 or 6760, depending on how the structure is positioned for today via the out of the money call speculation. So again, we'll be intently watching these levels. Again, if we drop within drunken sailor range, as well as the transitions, as well as below 85 and 80 and above 66.50, this could just be an overall just choppy mess back and forth via the intraday volume and how market participants are positioning for the day. So thanks for joining us, everybody. Sorry about the technical difficulties in the beginning. I'll hang around for a few minutes. If anybody wants to go over any individual equities, I'd be happy to cover those, and we can talk about any of the game plan for today. As always, come join us at GammaEdge.us. You'll be notified, newsletters, put in your education weekly newsletter email, and you'll be delivered beyond the bell here again on the weekend. And then free courses, Game Edge Fast Pass. This is our flagship options course. Make sure you sign up for it. You'll be delivered all of this education for free. And then our pricing tab, go there and you can be taken to our Discord, all the 14-day free trial, all the tools turned on, a great trading community, and we'll see how we can help you become a better trader and up to speed. So, yep, Pepsi. Mosey, we closed Pepsi yesterday in our P-Trans PGX portfolio for some excellent gains. I believe 6% and 5% on 14% position for our portfolio. So excellent gains there. Reason is we closed above plus GEX. So yeah, it's call dominated still. Plus GEX 150, COI 160. I don't know necessarily how much price is going to appreciate, structure to the upside. This expiry again stays the same, 150, 160. Next expiry 150, 250, 150, 250 PGEX COI. So structure actually drops. So for us, or for mechanical portfolio, we are taking some profits into the closing above plus GEX mechanically. So that's up to you how you want to play that. But we had two nice trades on PEP for our mechanical portfolios. So APLD, call dominated, above below spot price, transition very wide, and so our algos are drawing this very low in the overall option structure. Key takeaway, PGEX is 40, COI is 30. So it does not look like a significant amount of upside speculation. Yeah, so 40 with this expiry, PGEX COI, I would anticipate APLD probably not to go much higher than 40. Next expiry stays at 40. We do see some speculation to the upside there at 44, but not really seeing that moving to the upside much above 40 with this expiry. TLRY, yeah, the structure is very, I don't think they have, not enough options structure for TLRY, even though it has OI, but you see this is the only strikes that are available. So yeah, so ASML, yeah, let's check that one out. Yeah, sorry, Will. Not a lot of strikes available in TLRY. ASML call dominated above and below spot price looks good. Very wide transition though. Obviously, it's just how the algo is drawing it there. PGEX is 1030, COI 1000. Let's see what the expiry looks like. So PGEX and COI are actually below spot price. Next expiry, you're right at PGEX, even though COI is all the way at 1200. I would not anticipate that to move all the way to 1200. See what the next expiry is, 1100. Yeah, and you see the structure is very low strike here via the net OI, so just not really under dealer metric control. PGEX is 1037. Historically, that's an area where we take profit. So that's kind of where I'd be looking at if you're in it to take profit. But again, we like to have a structure that's much more dealer controlled or filled in via the net OI and call OI to give us an idea of where market participants are positioning. This is very low exposure area on that. So iron, call dominated above and below spot price. This has had a significant move to the upside. PGEX 66. So actually INGEX and POI are above spot price, and then PGEX is actually 66. So this is telling you that most likely price appreciation is probably most capped for now, just not a significant amount of out of the money call speculation to the upside. After this expiry, it moves to 72, and 70 and 80, but transition widens and you're within the overall transition. So 72 to the upside would be where I'd watching. So yeah, so Mosey, no, but just extensive commentary on the mechanical trades and the fast pass. So yeah, so also we have blog. Check out our blog at gameedge.us. Should be a video on that also on our blog. Go to gameedge.us and click on blog at the top, and you can look at that. So NBIS, call dominated above and below spot price, transition within overall transition area, PGX 140. So upside speculation still pretty present. This expiry PGX is 130, so maybe capped on price there, and 130 COI. Or COI and PGX for the next expiry there. So 130 is upside, where I'd be looking for most likely some stalling area. Even though we have out of the money speculation, I'd be where I'd be looking for some stalling area. So, hi, Tomka. Good morning. Thanks everybody for joining us. Again, we're trying out a new platform. I'm using StreamYard. Hopefully in the future, we're going to add some guests. So we're going to start some live webinars where we can bring in some people. We can discuss option structure. That's going to kind of be where we're going with this. So hopefully that will be coming in the future, as well as the Game Edge team. I'll be adding some members of our Game Edge team all at the same time, so we can discuss structure and just some other things that we'd like to go over. So yeah, we'll look at UNH. Call dominated, 400 to the upside, looks good. Transition very wide though, so a little bit of uncertainty there. 370 is PGX for this expiry. Next expiry, 390 PGX COI. So structure continues to advance. So UNH looks good. Again, not saying it's going to go that direction. Really depends on how the market moves and cooperates. But HIMS above transition, above PGX, above COI. 65 might be the stalling area, but PGX and COI are below spot price at the moment. PGX COI advances on the next expiry, so 70 to the upside. Out of the money speculation looks doable as long as the market cooperates. So yeah, HIMS looks good. So. All right. Thank you, everybody, for joining us. Again, like and subscribe, X and YouTube. You'll be notified when we go live with content. I'll watch this back. I'll see if the audio sounds good. I'll see what our picture looks like, see if we can make any adjustments, and give me any feedback on that. And just check out our X post, as well as our previous videos we've posted on YouTube. And then, as always, come join us at gameedge.us. And then the blog is up here, Mosey. Yeah, absolutely. Reach us on Discord, 14-day free trial, all the tools turned on. You can tag at admin. You can post in technical questions. Just lots of places you can post, or jump in our voice chat in the morning before pre-market. Our team is in there, and we're usually in and out, or we're within the Discord for the whole day also. So yeah, come join us. So, all right. Thanks everybody for joining us. Everybody make it a great day.